And now it's time for business, and Kate Moody is back on set. Welcome back, Kate. There's more trouble brewing for Chinese firm Huawei.
Yeah, the hits just keep on coming, really, and Beijing is describing these latest developments as hysteria. U.S. prosecutors have reportedly begun a criminal investigation against Huawei for stealing trade secrets from their American business partners. Germany, meanwhile, is debating whether to cut the firm off from its next-generation mobile networks. The University of Oxford in the UK has now suspended new donations and sponsorships from Huawei. Shirley Sitbon reports.
After scrutinizing Huawei's telecommunication products, U.S. lawmakers warn against using its solar equipment. They fear its components could be hacked and interrupt energy supplies in the U.S. Criticism has been piling up against the Chinese tech giant, the world's largest maker of telecommunications equipment. The Wall Street Journal reports that federal prosecutors are investigating if Huawei stole trade secrets from its U.S. business partners. In Poland, a Huawei local sales director was arrested on suspicion of spying for China. Even Germany, one of the company's biggest markets, is exploring ways to keep Huawei out of the 5G mobile network for security reasons. Chinese authorities say the only reason the company is being attacked is because it's Chinese.
We urge the relevant representatives of U.S. Congress to halt their unwarranted suppression of Chinese companies.
Huawei's founder, Ren Zhengfei, held Tuesday a rare meeting with international media, denying his company has been spying for China. His own daughter, the company's chief financial officer, is still being detained in Canada, where she's accused of misleading banks over Huawei's business in Iran. U.S. lawmakers launched Wednesday a bill that would ban U.S. companies from selling components to Chinese companies that violate U.S. sanctions on Tehran.
Now, those tensions could impact the latest round of trade talks between the U.S. and China, which are due to kick off at the end of this month. Beijing has confirmed its delegation will be arriving in Washington on January the 30th, led by Vice Premier Liu He. The world's two largest economies have declared a temporary ceasefire in their tit-for-tat tariff battle. Recent negotiations were hailed as positive, although few concrete results have been revealed since. Let's check in on the day's trading action now. Wall Street trading up. All eyes are on Netflix as it prepares to release its earnings figures. Its shares already soared earlier on in the week after it announced it would boost subscription fees. Morgan Stanley shares, though, are down after it broke the banking sector's hot streak with disappointing fourth-quarter results. The major European indices closed slightly down. The banking sector was the worst performer there. The FTSE 100 about 0.4% in the red. The pound is still strong, as it has been since the British Parliament rejected the government's exit deal from the EU earlier this week. It has breached $1.29 there. It's up about 0.8% against both the dollar and the euro. Earlier, I spoke to Forex strategist Jukes in London and asked why sterling has remained stable despite the upheaval in Westminster.
I think the first thing to look at is the context. Sterling fell an enormous distance after the vote in 2016 and is still, it's 9% off its all-time low in real effective terms. That was the level it reached when the UK called the IMF in 1976. It's 30-something% away from the highs that we've seen since then. So it's way below long-term averages, as we priced in early on in this process the danger of a chaotic exit from the EU and the negative economic implications of that. Even with the chaos of this week, the risk of a hard Brexit, of a no-deal Brexit, is diminishing. And for some, the hope of remaining in some form of customs union or even of having a second referendum that keeps the UK in the EU, that possibility is increasing somewhat, notwithstanding the fact that almost anything is still possible.
Well, why is that exactly? Why do markets seem more confident that a no-deal Brexit isn't really going to be on the cards when businesses and governments, including here in France, seem increasingly concerned about it?
I think there's a belief amongst markets that now that the House of Commons, that the Parliament in the UK has taken more control over proceedings, that it won't accept having a no-deal Brexit forced upon it, that it'll force some kind of conclusion. And that's certainly the position of the majority of MPs. They don't want that to happen, and are prepared to do quite a lot to avoid it. The danger, of course, is not wanting something to happen won't prevent it happening unless the UK can find some kind of a deal which it's willing to accept and the EU will accept. But at least there's a clear intent from the majority of the MPs in Parliament now not to let this happen.
The French government has stepped up its preparations for a possible hard Brexit. The emergency plan includes 50 million euros for airports and seaports. Many companies have already been putting contingencies into place, with the financial industry among the most affected. One company that's been preparing for Brexit and the changes it will bring is the stock market operator Euronext, which runs exchanges across Europe, including here in Paris. Its chief executive has been speaking to France 24's Stephen Carroll.
So I think that the finance sector is relatively or pretty well prepared. I'm more concerned about industrial and commercial operations that are not as familiar as we are with coping with regulatory transformations.
And you can see that full interview in this week's People and Profit online now. The Japanese group Hitachi has abandoned plans for a nuclear plant in Wales. The project is worth nearly $17 billion, and Hitachi will have to write off nearly $3 billion in losses. It had asked for more financial support from the government. Hitachi is also suspending work on another site in Gloucestershire. Hitachi said the decision was not linked to the ongoing Brexit turmoil, but the announcement is another blow to the British government, which had made nuclear power a key point in its energy policy.
Our decision has absolutely nothing to do with the political confusion linked to Brexit.
This government continues to believe that a diversity of energy sources is a good way, the best way, in fact, to deliver secure supply at the lowest cost. And nuclear has an important role to play in our future energy mix.
Citigroup beat expectations with its latest profits report earlier this week. Now some other figures are also raising eyebrows. The bank said that on average its female employees earn 30% less than men. That's largely because there are fewer women in high-paying positions of power. Citi said the results of this survey underscore the need to increase the number of women and minorities in senior roles. Citi is seeking to increase their representation to at least 40% to help balance the scales. Of course, these reports shown are always a little bit depressing as a female to hear these kinds of things. If, though, it prompts action on that kind of a level, it's good to have the figures out there.
It also seems very strange to me that the very company or the bank that is responsible for not having as many women in those positions of power is now saying that we must have more. I mean, they should
presumably they're going to be
it.
taking action to help underscore that need and to promote women who deserve the positions, obviously.
Right, of course. We don't want women that don't deserve those positions to get to those positions, because then it would be kind of like real life for men. Sometimes, that happens. Thank you so much. That was Business News. We'll be back in just a few minutes.